5% amid rising inflation. World Bank, African Development Bank, to connect 300 million Africans to electricity, plus oil slips for third session, unlikely higher for longer U.S. rates. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Musa Abubakar, your guide. Let's begin with the cherry news for Nigeria. Despite being commonly perceived as heavily indebted, Nigeria has been ranked as the second least indebted African country by the International Monetary Fund, IMF. This ranking emphasizes the significance of metrics such as the debt-to-GDP ratio in assessing a nation's financial health. Lower ratios indicate stability, while higher ratios raise concerns about debt sustainability. Tanzania's top position with a debt-to-GDP ratio of 41.8% showcases its prudent debt management practices. Nigeria closely follows with the ratio of 41.3%. highlighting its importance in Africa's economic landscape. Despite its external debt reaching $41.59 billion or 31.98 trillion naira as of December 2023. In a bid to sustain efforts towards reducing inflation in the country, the Central Bank of Nigeria, CBN, has increased monetary policy rate by 150 basis points to 26.25%. This was the position of CBN Monetary Policy Committee at the end of its 295th meeting in Abuja. This is the third time the Monetary Policy Committee members are meeting this year. On the committee's priority list is to review recent financial and economic developments and assess risk to outlook with the aim to achieve price stability through their next line of action. Members observed that while year-on-year headline inflation in April 2024 rose moderately, the month-on-month measures of headline, food and core inflation all declined.
There is light at the end of the tunnel, and that is because much as we see an increase in inflation, in the inflationary figures, when you go down to the specifics in terms of food, in terms of core, in terms of headline inflation, you see that it is moderating and decelerating. MPC urged that more be done to address the security of farming communities to guarantee improved food production in these areas.
with a marginal increase in the external reserve balance between March and April 2024. Members urge banks to sustain focus on accretion to reserves. They attribute the recent volatility in the foreign exchange market to seasonal demand, a reflection, they say, of the interplay between demand and supply in a freely functional market system.
With respect to recapitalization, of course, we're looking forward and saying that we need the banking industry to be a lot stronger and more robust, particularly considering the $1 trillion economy that the federal government is anchored itself towards. We have gotten much of the feedback from the banks with respect to what their plans are.
They believe that the decision to increase from 24.75 to 26.25% is on the right track to reduce inflation, with liquidity ratio at 30%, cash reserve ratio at 45%, and asymmetric corridor at plus 100 and minus 300 basis points. And after a discussion, the Central Bank of Nigeria, MPC, has raised the benchmark, as you heard from that report, interest rate by 150 basis points to a new record of 26.25%. This is coming after the committee raised it by 200 basis, 200 basis points in March. The decision, according to the committee, is to fight inflation as well as to achieve price stability, which has weakened against, the Naira, which to somehow support the Naira, which has weakened against the dollar by 30%. And with headline inflation rate climbing to a decade high of 33.69% in April from 33.02% in March. Now, to shed more light on the issues concerning CBN's recent announcement and what it means for Nigeria's economy, is an economist, Yusho Aliu. You're welcome to Business Express.
Thank you. Good afternoon.
Now, you've heard the CBN governor. He said there's light at the end of the tunnel. Seeing the inflation figures, we've seen inflation increase on a year-on-year basis, but on a month-on-month basis is somehow decelerating, somehow moderating. So what do you make of this development?
What I make out of this development, you look at the history of the coming of the new central bank governor Kodoso, and also the desire at that particular time when there was no MPC, and also you relate to the development as far as inflation trend is concerned. However, moderation in general general stability of prices does not remain only on existing conventional monetary tools, which are very good in advancing certain economic strategy to attract FDIs and other components. But what is more important to understand is a trade-off between conventional monetary tools used by the central bank as well as unconventional monetary realities on ground, which shows that inflation is very high at 33.69%. And also, not only looking at the percentage increase, the CBN was able to quote certain assumptions, especially with regard to year-on-year inflationary headlines, but fails to understand also that there are factors that are unconventional. The central bank emphasizing on issues relating to security. Definitely, if you raise MPR, you are attracting foreign direct investment, you are attracting foreign resources, but the moderation that has been exhibited by the economy is attributed to the stability in the forex with the advent of a certain stability by the central bank. But however, what I think we must be understanding is that you cannot all the time uses conventional monetary policy.
So now you are saying that we are not seeing the fiscal authority now complementing the CBN's monetary policy.
Of course, the reality that shows that inflation going high, the essence of all the use of monetary tools is to control inflation and establish stability in general price. But remember, over 22 months, consecutively we have been arguing that raising the MPR definitely is not going to bring stability, and it is not bringing stability. Nobody can dispute that. The assertion by the central bank that months on months there is a little moderation, but that moderation does not exclude rising prices, and more especially on what we produce within this economy. Agric is very important. Consuming of agric product is very important. Growth level development is also very important to the general prosperity of the economy.
So that now we are seeing a situation whereby the CBN does its own thing with the monetary policy thing, but we are not seeing a kind of complementary role by the fiscal authorities. Now, the CBN talked about addressing insecurity as one of the major contributors to this hard-headed inflation we're seeing. And I think they also talk about the Naira thing, where we've seen the exchange rate is somehow doesn't favor Nigerians, because by the time you import goods into the country, you know, the amount of the price that you tag on those goods becomes very high. So now we've seen 750 basis point increase over the, I think over the like
days.
3 times.
90 days.
We've seen 750 basis point increase. How long will this take us to reducing inflation? How long? Because we remember that you said that this alone cannot really make the much impact that we want.
It will not, and so far as we continue to raise MPR, is indirectly raising cost of production. Remember, cost of borrowing is always attached to the situational position of the MPR, and if you have a situation of this, prices are rising persistently, income is being eroded continuously, then consumption is also being hampered, and if consumption is hampered, definitely it will make producers in the economy will make low sales, because the available cash which the central bank is trying to remove excess liquidity in the economy is not allowing people to consume what they ought to be consuming for us to have a desired growth level. Remember, there are various composition of target of growth in 2024 by IMF, by central bank, and also by the fiscal authority. So in my own opinion, it is high time, in my own understanding, and based on what has transpired over 22 months of raising the MPR. Remember, we have never had a situation where the central bank came out boldly to put 400 basis increase at a particular time, and notwithstanding, within 30 days again, additional 200 basis was added, and we have seen the highest inflation over a very long period of time of 33.69%, which, if you take an income that is only 30,000 naira in an economy, and you tend to expand the relativity of this inflationary trend to that income, you would discover that when prices are going up, consumers has to do with certain goods not being effective, and if they are not effective, it means that producers of those products will have to record low sales, and by recording low sales, they have to be frustrated, and if they are frustrated, you see high unemployment coming in an economy where prosperity is blink.
Okay. Well, it's now time to take a pause for some messages. Business Express returns after the break.
Is in search of solution to our numerous challenges.
The Paul Alaje Colloquium presents its maiden event centered on the critical pillars of economy, security, development and governance. Theme: Nigeria's development, navigating the way out of the economic crisis and insecurity. Keynote speaker: Chief Olusegun Obasanjo, GCFR, former president of Nigeria. Some of the presenters include Mr. Nuhu Ribadu, National Security Advisor, Mrs. Hadiza Bala Usman, Special Advisor to the President on Policy Coordination. Sessions centered around crucial national issues with influential speakers and engaging panel discussions to be moderated by renowned Nigerian TV anchors. Saturday, May the 25th, 2024, Ladi Kwali Hall, Old Sheraton, Abuja Continental Hotel, 9:30 a.m. prompt. Vendors can register at www.thepaulalajecolloquium.com for product exhibitions. Registration is free and closes on May 20th, 2024.
We as the people must also engage in this search for the greatness of our nation, Nigeria.
The Paul Alaje Colloquium, Economy, Security, Development and Governance.
Thanks for being there. Well, we're still talking about Monetary Policy Committee, recent Monetary Policy Committee rates. We're talking about how to tackle inflation. Now, the CBN attributed the volatility in the foreign exchange market to seasonal demand. How long do you see this lasting?
It will continue as long as the MPC continue to raise to hike MPR. Simply because cost of borrowing business is increasing, prices must be increasing. You don't have any alternative to that one. Second, so long as the economy remain unsecured and production zones unaccessible, there is going to be an increase in bottlenecks in the supply of goods to the market. Remember, we are just about going into the rainy agric season, and going to agric season will reveal a lot of shortages because farmers will be auctioning some of their assets to go back to production, and going back to production with high cost of input is also very dangerous to the economy and very substantive to the inflationary trend. What I am assuming, what I am advancing to central bank, first, I always said, please, inflation is going high. In maintaining price stability, unconventional aspect must be looked into rather than conventional tools which are aggravating the spike in the inflation.
Okay, now on the foreign exchange market, we've seen the reforms by the administration, by the Tinubu administration, and it's to a point we've seen Naira gain value. Then now we've seen a kind of some sort of slide which the CBN attributed to the seasonal demand thing. What do we do next in this step to see that we have sustained the gains we've seen when the Naira now somehow improve in terms of value? How do we sustain these efforts?
We can sustain it by the coming of all control agencies. The EFCC has to sustain control over excess supplies of foreign exchange in the economy, and also the supply chain.
But do we have excess supply of foreign exchange in this country?
Of course, we have them outside financial institutions. Okay. And that is why today you find a situation where a lot of dollars are kept outside banking vaults. And if that strain continue to affect the economy, there is going to be volatility because people enjoy the taste of keeping these currencies outside banking halls for many reasons. I don't know much of them, but I know that the CBN discoveries, the EFCC discoveries has revealed a lot of factors that have hindered the supply of.
But why are they keeping it away from the banking vault?
It has to do with the bank verification number. Nigerians no longer want to operate most of their banks because they can easily be traced. So in any shady deal, they prepare to go to parallel market and have other stock to keep so that they can maintain their strength in the market. So but with the use of this financial crime control administrative system, we can checkmate the excesses. More importantly, now that we are going into deeper and deeper into the appropriations of the federal government and all the state of the federation, there has to be a lot of eagle eyes attached to all these premises so that to detect who are converting domestic currency into foreign exchange not for transaction purposes.
What about productive activities?
Productive activities, like I said initially,
Like
one of the most important things is to check our agricultural production. You cannot produce at high cost and expect food to come down, the prices to come down. There should be an avenue where cost of input is being relative. If it is relative, farmers can afford to put little resources and then make production that will assist the output. And assisting the output, it will assist the hike in inflation, and it will balance the demand and supply aspect of determination of price.
Okay, thank you very much, Ishu Aliu.
Thank you very much.
It's been a pleasure having you on the
Thank
program.
you very much.
You know, inflation is a very interesting topic, and we'll still continue talking about it as the CBN continue to address the issue of inflation in the country. Thank you very much. Now, let's see how much the Naira is exchanging for other currencies. Well, it's now time to do a check on commodities. Let's now take a trip to the commodities market. And now we head to energy market, where oil prices fell for a third straight session on Wednesday on expectations that the Federal Reserve might keep U.S. interest rates higher for longer due to sustained inflation, potentially impacting fuel use in the world's largest oil consumer. Brent crude futures were down 71 cents to $82.17 a barrel, while U.S. West Texas Intermediate crude futures slipped 73 cents to $77.93. Oil prices settle about 1% lower on Tuesday. The United Kingdom government said that it is committed to supporting Nigeria's capital market development through its mobilizing institutional capital through listed product structures Mobilist program. According to a press statement from the NGX, the UK said Nigeria's capital market has the potential to play a crucial role in achieving the country's economic objectives, including the transition to clean energy solutions and to meet the sustainable development goals. The Mobilist program aims to facilitate this by mobilizing institutional capital through innovative listed product structures. Next is global markets. Well, let's see what the prices are.
Thank you, Musa. Welcome to the global market segment. European stocks fell this Wednesday as markets in the region continued the up and down which we saw since yesterday, based on the inflation outlook and the trajectory of interest rates. The DAX lost 0.37%. UK's FTSE also went down 0.57%, and the CAC 40 of France also dropped 0.65%. Markets in Asia closed mixed, although most stocks were lower. In Japan, we see the Nikkei 225 drop by 0.85% at 38,617.10. In Shanghai, we have a marginal appreciation of 0.02% at 3,158, while Hong Kong's Hang Seng Index went down 0.13% at 19,195.60 basis points. U.S. stock futures also slipped Wednesday as investors looked ahead to the widely anticipated release of Nvidia's latest earnings report. All the key indicators or the key stocks in U.S. were all in red. The Dow Jones, the S&P 500, and the Nasdaq all posting red figures. Markets in Africa displayed mixed sentiment this Wednesday. South Africa's JSE Africa Top 40 went up by 0.11%. Tunisia's index also appreciated 0.05%, and in Ghana there was a marginal 0.00% appreciation, while Namibia's overall index dropped by 0.10%. That's it on the global market. It's back to you, Musa.
And we thank you, the lady in white, for that market update. Well, this is where we end today's edition of Business Experts. We value your feedback, so keep the comments, observations, and suggestions coming. Be informed that all previous episodes are available on YouTube on NTA's channel. Business Experts returns Thursday at 9:30 a.m. I'm Musa Bakar. Enjoy the rest of your day.